TTK Prestige in last 8-10 days has recovered a lot of lost ground. Let's connect with the management to understand the business environment. The business environment, at least for Q2 for TTK Prestige, was slightly challenging because of power problems in Tamil Nadu. The chairman himself, Mr. TTK Jagannathan of TTK Prestige, joins us live. Mr. Jagannathan, good morning and thank you for joining us. Let me ask you a straightforward question.
Good morning.
Are the power problems in Tamil Nadu over for TTK Prestige?
No, not at all. They've become worse actually.
Which means your Q3 numbers will be even worse than Q2?
I won't predict that, but Tamil Nadu power problems haven't improved.
So the big reason why your Q2 numbers were slightly below market estimates was because of the core problem, the core power problem. Now that situation has not improved, how are you planning to address that?
Well, we have to sell as much as you can in the states where there is power. Tamil Nadu is the only state with serious power problems. Other states don't have these problems, so we have to address that.
So how do you see growth panning in the south markets then? And would you say that your market share as well would take a beating purely on account of the kind of power problems you've been facing?
On the contrary, our market share has improved. The market has dropped, but the market share has improved.
Mr. Jagannathan, last time when we interacted with you, you did mention the word slowdown and you indicated that, look, inflation seems to be hurting the economy and you're feeling the pinch. Have things improved for TTK Prestige? Because last month, I'm sure you must have hit an uptick because of the festival demand.
Actually, the festival demand was very muted. Across the country, dealers tell us that their sales in our category is about 30% less than last year. So the festival did not produce a major uptick.
Are markets wrong in assuming that the growth environment is strong for TTK Prestige? Because the way markets are pricing in your stock, they believe that you will have a linear growth. But what you are indicating is that you've certainly hit a bump on the road.
This quarter will be a bump for two reasons. One, that the festival season was a damp squib. Also, the same time last year was very good. So the base effect is also going to hurt us. But going forward, I don't see a problem.
Mr. Jagannathan, your company has been scouting for acquisitions of European brands to increase your presence in the European market as well. Have you identified and initiated talks with any potential brands or sellers?
No, we're still looking.
So how are you planning to utilize the cash on your book? You're a zero debt company. You generate a lot of cash every year and you're still sitting on a cash surplus of about 120 crores.
Yes, we're going to hold it till we find a European brand to buy.
So where exactly are you scouting? Can you give me a feeler? Are you looking at buying something in the same category? Are you looking at a category expansion?
No, same category, cookware, same category.
But would the acquisition size be 100 crores, which is the cash on your balance sheet right now, the cash in hand? How is it that you're going to fund an acquisition which is going to be larger than what is, the amount on your books?
Well, we're looking for an acquisition up to 400 crores and we'll be able to fund it with debt and equity in hand and we'll repay the debt very quickly.
But Mr. Jagannathan, if I look at your 5-year track record, what has differentiated TTK Prestige from other group companies is your strong return on equity. You've not diluted and your return on equity because of strong cash management has only improved. Now that you are getting a sense of a slowdown, what will happen to your return on equity and return on capital?
Well, there will be a slight slippage in ROCE, but we will still have very good cash management.
Can you define a range for us? Can you give me a number for a better understanding?
We are currently EBITDA to capital employed is about 50%. I presume it will be in the range of 45 to 50%.
Big drop. Okay, I'm going to shift gears and talk about your other group company, TTK Healthcare. What is the update on that and when do you think you will be able to go ahead with the merger process?
The courts have approved now and so that will happen very quickly. And the environment for TTK Healthcare is looking good. There's no slowdown there.
What my understanding is that after the merger in TTK Healthcare, the promoter holding would be about 87-88%. As per the new norms, you will have to bring it down. So once the merger process is over, would you be doing a placement?
No, actually we've already done that in the sense that we've sold some of the shares of the merging company, that is TTK Protective Devices, so our share does not exceed 75%.
But you're confident that the merger will be finished in 2014. When I say 2014, financial year 2014.
Yes.